I've had 24 shrimp. One shrimp. 50 shrimp.
They had 8 different types of shrimp. It's $22 a person.
Recently, I've been reading deep into something surprising about one of America's largest seafood restaurants.
Restaurant chain Red Lobster has officially filed for bankruptcy.
Somehow, one of America's most stable brands went bankrupt seemingly overnight. And when this first happened, everyone blamed it on one thing.
There are endless seafood promotions.
But this isn't the full story. In fact, it wasn't even really a bankruptcy at all. Red Lobster's biggest investors made $1.2 billion from this. And when it all plays out, Red Lobster will continue to be around. To find out what really happened, I dug deep into the filings surrounding Red Lobster. And what I found was pretty shocking. Red Lobster's biggest supplier had been plotting against them for nearly a decade, and no one had any idea about their secret plan to dismantle Red Lobster. Okay, so let's get started. There's actually a few characters involved in this story. The story starts in 2014.
We're servers at Red Lobster, and we see food differently.
Red Lobster was one of the most successful seafood restaurants in the country, and their endless shrimp promotion had been going strong for a decade.
It's Red Lobster's Festival of Shrimp.
They were firmly rooted in American culture as a staple seafood option, and were looking to expand globally. But they had one thing standing in their way. Red Lobster was owned by a restaurant portfolio called Darden. Darden has been in the restaurant industry for a long time and owns many brands like Ruth Chris and Olive Garden. However, due to the fact that Red Lobster is a restaurant targeted to the middle class and margins on seafood are very low, Darden strongly believed that Red Lobster's growth was not sustainable. And because of this, they put the brand up for sale in 2014. After many months of negotiations, the sale closed and Red Lobster ended up in the hands of 2 buyers. The biggest buyer was Golden Gate Capital, a private equity firm based out of San Francisco. This wasn't an unusual deal for them, as they had brought many similar companies in the past. But the other buyer was a little more unusual. This was their very first time buying equity in a restaurant. And at first it wasn't immediately clear why, but then I started looking into it. Thai Union is a seafood supply company. In 2023, they imported over 20% of the seafood eaten in the United States. They've been involved in all sorts of scandals such as slave labor, human trafficking, and unfair labor practices. But we don't have enough time to get into all of that now. When they found out Red Lobster was for sale, they hatched a crazy, almost evil plan. At the time, they were Red Lobster's biggest supplier, and although they promised to maintain relationships with all suppliers, after the deal closed, they became Red Lobster's only supplier. At first, no one minded that Thai Union made themselves the only supplier. They didn't raise their prices, and they didn't do anything nefarious right off the bat. Plus, they only owned 25% of Red Lobster, and Golden Gate would surely keep them from doing anything crazy, right?
Viral pneumonia has hit central China's Wuhan city. Authorities have reported 27 cases in total.
It's a new type of coronavirus.
2020 was a terrible time to be in the restaurant business, much less the seafood business. The seafood supply chain was essentially shut down for months, and the demand for restaurants was at all-time lows. This wasn't good for Red Lobster, and especially not for Golden Gate Capital. They found themselves overly exposed to the 2020 pandemic, and were looking to get out of Red Lobster fast. This was exactly the moment that Thai Union was waiting for. While the world crumbled and the seafood market crashed, Thai Union was buying a 100% stake in Red Lobster. But if their main source of business was crashing, how did they afford to buy Golden Gate Capital out? Well, they got it for free. Since they didn't have any money to offer Golden Gate Capital, they made a deal that in exchange for them receiving 100% of Red Lobster, Golden Gate would receive 100% of Red Lobster's real estate. From a business perspective, this was a really bad deal. Red Lobster was worth almost nothing without its real estate holdings. And immediately after the deal closed, Thai Union took a huge loss on the books. Now that Thai Union had complete control of the brand, they started raising their prices. This is when many franchise owners took notice of what was happening. The seafood market was recovering from the pandemic, and prices were going down for everyone but Red Lobster. In fact, Thai Union was raising the prices. Franchise owners pleaded with corporate to do something about the prices, but their cries fell on deaf ears. On top of being forced to buy overpriced ingredients, since Red Lobster no longer owned the land their franchises were built on, restaurants who weren't paying rent before all of the sudden had a new monthly expense. It quickly became too much, and many franchise owners were forced to close down. Some were forced to file bankruptcy themselves. Thai Union didn't miss revenue from the lost restaurants. Any loss they took on Red Lobster would just be a bigger tax write-off. The more Red Lobster suffered, the more Thai Union profited. After the initial wave of store closures, Thai Union was ready to take things to the next level.
It's Red Lobster's Festival of Shrimp.
Endless Shrimp was a seasonal promotion that Red Lobster profitably ran for 15 years. In 2020, Thai Union realized that shrimp was the most profitable item that they supplied, and therefore Red Lobster needed to sell more of it. They introduced a new menu that included more shrimp dishes and brought Endless Shrimp back to stay year-round. And franchise owners hated it. A customer only needed to order 3 plates of shrimp for them to lose money, and customers knew how good of a deal it was.
This is how much shrimp you need to eat at Red Lobster for their Endless Shrimp deal to not only break even, but to profit on your short-term investment. All in all, I think you're profiting and in the green just after 2 orders.
On top of this, customers tended to stay longer, which kept their servers and kitchen busy and their tables full. Overall, the Endless Shrimp cost the company over $20 million. A lot of franchise owners were forced to shut down, and Red Lobster was no longer able to pay its debt. In 2024, they were forced to file bankruptcy, only a shell of their former self. That's not where the story ends. Because this is only a Chapter 11 bankruptcy, it is only a restructuring of debt. Red Lobster will still be around, and Thai Union will still be the only supplier